Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, we have to discuss the Russia and Ukraine conflict in regards to rising oil prices and what it means for you and your portfolio. So first off, if you haven't noticed, the price of gas is going up. When we talk about rising oil prices, that is usually the first thing that we think about. My gas prices are higher. And unless you are lucky enough to live in New York, when it's warm, when it's fun to live in New York, and you ride the MTA every day, you probably don't care about gas prices, but everybody else does. And it does have an impact on where you're going. It has an impact on your mood and whether you feel like going across town to go do whatever, right? That, when it's $4.19 like it was for me today, I'm not going nowhere. I'm going straight to daycare and back, and that is it for me. But this means that it also has an impact on the stock market, and it has an impact in places that you don't even notice, or at least most of us don't notice. So let's go ahead and start from the top. Right now, with the Russian-Ukraine conflict, obviously that is a tragedy in and of itself. But for those that don't know, on the economic side of things, Russia is the second largest producer in oil, which means that they make obviously a lot of oil. We need that oil to produce a lot of stuff, not just gas. The other part of this is we decided to ban, which is a good move, we decided to ban Russian oil, which means that they have less money to do all the terrible things that they're doing. Basically, we're looking to kind of choke off their funds and quell the fire in that way, where they don't get the oxygen. The oil was the oxygen in this scenario. They were using oil money to do stuff. So we said, look, we're not going to buy your stuff no more. Now, while that is a good part of this argument, the other side is now you've created more of a supply and demand issue, and you've created an even worse situation when it comes to inflation. What do I mean by that? Well, remember, supply and demand, right? You got supply, oil, and the demand. I need these things to go do X, Y, and Z. So when you cut supply and you still have that demand, prices go up. That's what we've seen. It's why you see ExxonMobil, Chevron, and a lot of energy stocks, particularly in the oil producer category. That's why those stocks are soaring. I think we said yesterday that ExxonMobil was up like 42% this year. And it was also up last year because, we still had a supply and demand problem. But again, it's up 42% this year alone, and we're just in March. Well, here's the other part of this. 60% of the oil that we use is used for gas prices. That's the stuff, or not gas prices, but for fuel production. The other part of it, the other 40%, which is still a lot, is in things that you are probably not even thinking about. Anything that has plastic in it, yeah, that's oil. Yeah, those prices could go up. We're talking about glasses, Band-Aids. I made a list here. Shoes, vegan, leather, and even food. I say food because fossil fuels are used in some parts of fertilizer. So let's say you're growing, I don't know, corn, or I don't know what people grow. I'm clearly not a farmer. Strawberries or whatever. If I'm a farmer, that fertilizer costs me more, guess what? It's going to cost you more. I'm going to pass those costs on. And when you go to a Costco, Kroger, Target, Walmart, those prices are a little bit more inflated. This is making the situation worse because we already had a supply chain issue. That was a part of inflation. We were dealing with COVID. That is fading to a degree, but still supply chain is an issue. And now you have a lack of oil. You have an oil problem, an oil crisis. I don't know if I want to say crisis yet, but we have an oil problem when it comes to supply and demand, and those prices are rising. Therefore, I'm not only paying more for gas, I'm paying more for groceries. I'm paying more for even medicine, right? Vitamins. All of that stuff is tied up into how we use oil and what we use oil to produce. Anything plastic, computers included, ring lights that I'm looking into right now, the camera itself has some products of oil in it. All these things are going to become more expensive. What does this mean for your portfolio? Well, first off, you're going to continue to see lots of volatility. These violent swings throughout the days and months are going to continue. Today, in and of itself, at one point, the market was down, it looked terrible. Midday around, 12 or so, the market was up, everything was great, and then it closed and it was down yet again. that's going to continue to happen. And as an investor, I see 3 opportunities that you have to manage this situation. 3 solutions to manage this volatility, to manage these rising costs in oil, and how things are moving. Now, I've already said yesterday that we're getting close to that first quarter review. Time to sit back, reevaluate your portfolio and say, okay, this is what I thought going into 2022. This was right and this was wrong. Let's make some adjustments. It's right about time. It might be a little early, right, to go ahead and start to make those changes. We don't do these changes every day. We wait a quarter, we wait 6 months, we wait a year to make those particular changes. However, given the volatility and given the craziness that we did not expect, like an entire war, which is unnecessary, we've got to discuss it, right? So here are 3 things that you can consider doing. One of those we'll start off with, because we talked about it yesterday. You can start to reposition your portfolio more to defensive stocks if you haven't done it already. You may want to reposition your investments to energy if you want to go to that space. Healthcare if you want to go into that space. Those are just 3 areas that you want to consider. Feel free to go back and watch yesterday's video for the 4th area that we talked about. This repositioning, again, is not sell everything in the world and put everything into those 3 or 4 categories. It's saying, hey, look, if you already held some quality stocks, they're probably still fine. They might not be green right now, but they're fine. Let's add some things to balance things out. Maybe I can get a dividend here or there to at least make me feel better, but also help my performance a bit because I know I'm going to get that money in. I went over each of the 4 sectors and gave you a few names to look into. So check out yesterday's videos. Number 1, repositioning. That is something that is common. I personally do it every 6 months, but you may want to consider it now, given that nobody had war on their bingo card, right? So that's option number 1. Strategy number 1 is to reposition your portfolio. Number 2 is you can sit back, as difficult as it may be for some, and do nothing. It is okay to do nothing because there's not much we can do at this point in time, right? That's the truth of it. So sitting back and sitting tight and say, look, I own what I own. I'm going to hold on to it. And this may or may not be a bad year. That's actually fine. Buying and holding, that's what we mean. When the market is down, you still hold, right? That's totally fine for you to do. I've talked about companies like, I talk all the time about Microsoft and Apple. Someone asked me about Amazon. As a stock, Amazon should not be down, but it is, right? You got to decide whether or not that, hey, is Amazon going bankrupt? Probably not. Could the supply chain and cheaper oil fix the problems with the stock? Probably so, right? Same thing with Microsoft. There's really no reason in my mind that they should be down other than maybe, supply chain, which was already an issue, right? And the cost of oil maybe impacting the cost of chips and a lot of other plastic components that go into their computers, even though that's just one part of their business. That's fair to say. The question is, again, if we were able to produce more oil or this conflict is resolved, would those companies still be better? Would they be better off? Would they start to grow after that? The answer is probably yes. Same thing for Apple. It's going to cost them more to create, if it's going to cost me more for eyeglasses, it's probably going to cost me more for the glass to create the iPhone and the other plastic pieces that go into it. It's probably going to hurt Apple. Again, when these things are resolved, would Apple be a good company again? Yeah, so why sell, right? That is another approach you could take and say, look, I already own quality companies. I don't need to make any decisions. I'm going to hold what I hold, and I'm just going to wait for however long it takes for things to improve. That is an okay approach. We're not even a full 3 months into the year. Remember that. Okay, we're not even 25% done with this thing. And I know it's rough, and we'd rather, simulate to the end, just get it over with. I feel you, right? But there is a chance that things could get a lot better. Remember, 2020, when the coronavirus first hit, there were no vaccines. We didn't know what was going on. We didn't even know what this was. The market dropped close to 30% within 2 months. And then things got better before the end of the year and we were up double digits. This is not nearly as bad as that. Yeah, as of yesterday, we were down 11.7%. We're probably down 12% on the year. Again, we did worse, right? We've been in worse spots and we're up by more by the end of the year. That's not an indication that this is going to be the same, because this is a completely different issue than what we had dealt with previously. But you don't want to overreact and say, I'm selling everything, I'm leaving, I'm going to go do something else. So I'm selling everything in my 401k, I'm going to sit in cash until things get better. I don't think that's necessarily the best move. If you know what you own currently, then you might want to just sit on it, assuming that those companies are good. Now, if you bought something that's trash, I can't help you. I don't know what you own, okay? But we talked about quality stocks here. We cover quality stocks here. So if you have a good ETF and you know that you got JP Morgan and they're not going bankrupt, then it might not make sense to sell at this point in time, okay? At this point in time, sitting still, relaxing, saying, look, I'm holding for the long term, 2 years, 3 years, 4 years, whatever. I'm sitting here for the long term and stick with that. That is totally fine. That is strategy number 2. Then strategy number 3 is dollar cost averaging and saying, look, the market is falling. I understand that. Every 2 weeks, I'm buying more of what I think is quality. Because if it's an Apple, if it's an Amazon, if it's a Microsoft, if it's Kroger, Costco, Walmart, whatever it is, CVS, I'm really just naming stuff that I like, but if that's the case, if these companies are falling down, you're like, I don't really think it should. Netflix, right? I don't own Netflix, but people like Netflix. They had a 52-week low. Facebook hit a 52-week low at one point today. And if you think these are good companies and they're falling at these levels and at this rate, I'm just going to buy on a regular basis. Because what I don't want to do, what I don't want to miss is a year from now, notice I'm saying years and not days, a year from now, this would have been that buy low moment. You're never going to know what is the bottom, right? That's what dollar cost averaging is for, where you don't have to guess. And you're saying, look, whether the stock is up, whether the stock is down, I'm putting in whatever I'm putting in every 2 weeks, every week, whatever number makes sense for you to continue to hold and add on to companies that make a lot of sense. Remember, if you were investing in 2020, when the market was down as bad as it was, people weren't talking about Tesla. People weren't believing that Tesla was the company to buy. And it was up like 400% at that point in time. Everything was down back then. Right, and those who dollar cost averaged and said, look, this is the time when everything is bad, when we don't know what's going on, when it looks like the Great Recession, when it looks like the Great Depression, which is what people said and thought back then, that, hey, I'm just going to buy more of what I got. I think I got quality companies, and whatever you were owning back then, say, look, I'm going to scoop up a little bit more here, scoop some more here, scoop some more here, every week, every 2 weeks, every month, 1st and 15th, whatever it's going to be. After a year, they looked like geniuses. By the end of before the end of 2020, they looked like geniuses. And in 2021, they still looked really, really smart by doing that. You have an opportunity to do it. The thing about investing in markets like this, when the market is down, when things are crazy and they don't make sense and they don't feel good, really, is that those who have the foresight say, look, I'm going to hold firm. I'm going to stick to my strategy. I'm going to hold things that are quality and things I know aren't going to go anywhere. Once this thing is over, keyword, once this thing is over, then those are the ones who profit the most. Those are the ones who build wealth. Warren Buffett has the quote about be fearful when others are greedy and greedy when others are fearful. People are fearful right now. Now, I'm not telling you to be greedy because I don't like, greed. But this could be your chance to say, look, the companies that I really truly believe in, that I know are good, that are beaten up by 20% for no good reason, I might as well own them now, right? I'll get in at that low point, and at some point in the future, when this thing is cleared up, just like I told you with the coronavirus, I didn't know it was going to last 2 years. I had no idea how long it was going to last. However, the stuff I bought in 2020 turned out to be pretty damn good. Same thing here. Things that I'm holding, and a lot of them are stuff that we've been talking about for a while here, should be pretty darn good between now and the next year. Hopefully, right, my goal is to have it be, good in 6 months. But if it's not, we hold and we see what makes the most sense. So it's not a time for panic. It's time to understand what's going on and understand what ways to position your portfolio and what you need to do as an investor. So those 3 things, again, you could pivot and add some of those defensive stocks, adding some of those healthcare companies, adding some of those defensive companies, perhaps adding some of those energy companies and more. That can even things out if you decide to do that. sitting still and doing nothing and saying, look, I'm going to take the passive approach. I know I have good stocks. The market is not agreeing with me. Just because the market falls doesn't mean that you were wrong. If you're investing, I'm trying to pick something new. I don't know, take O'Reilly's or something like that. You know, some good solid company was fine until this year. It's still good. It's just the market is doing what the market is doing. Same thing with what happened with Nvidia, right? Nvidia is a good company, but it's down. That's an overreaction. When they announced earnings and said we've made more money than we have in the past 10 years and the stock drops, fine. That's one of those chances for me to say, look, oh, I'm definitely buying more of this, right? The market doesn't agree, even though the company knows it's good. They made more money in the last 10 years than they've made. It's a record. It's a record. That's fine, right? So you got to go through your process and know that what you are holding is good and the market is going to catch up, because the market is dealing with inflation stuff that we already knew about. The market is dealing with an international war that in some cases don't have nothing to do with the company that you own, right? And you don't need to react to that. And you say, look, I'm gonna let the market sort it out, but I'm gonna sit still, do my Zen thing, whatever the thing is, and just relax and let that sort out itself. And the market usually, as we know this from history, because it's not the first war we've ever seen, that the market will kind of correct itself and move in the direction that we need it to. And then lastly, the last technique is just dollar cost average. Hey, just keep adding to your positions. In time, it's going to make more sense. It is never, ever, ever fun to do it in the moment. You don't see me investing on Fridays with a smile on my face necessarily, especially when the markets are like this. But you do see a smile on my face when these things start to clear up and say, oh, look, we were right. A lot of times when I told y'all about Avis, was that last year? At the time, stock wasn't all that great. But eventually it actually took off. It took time, right? So continue your process. If you want to stay still, stay still. Nothing wrong with that. If you want to reposition, reposition. Nothing wrong with that. If you want dollar cost average, nothing wrong with that. Those three strategies, or a combination of those three, are going to be your best moves in times like this. All right, last thing that we want to talk about today before we go. Hit the like and subscribe button. We are growing the YouTube channel. I got some things out there for y'all, as well as the Investors Toolkit. We had talked a little bit about this yesterday. There is a discount code. When you type in the word subscriber, you get to save $300 on the Investors Toolkit. If you choose the payment plan, which I think is $349 a month, and you use a $300 discount code, the first payment is only $49. So you're able to, get in real cheap right now if you choose to. But I do monthly investor calls, very similar to this, but we get to converse. I have a monthly stock list that we talk about. But essentially the thing is this: it is hard to understand investing, especially if you're starting and you don't have a clear process. When you don't have a clear process, you get confused, you waver, and you kind of panic. The Investors Toolkit is your way to not panic. I give you a 7-step process on what to do no matter what the market is doing, no matter what your budget is, so you can be in the right places. That is what the course does, and I am here to guide you every step of the way. So make sure you go to buildingbread.com/tools, and that's it for today's video. I'll talk to y'all tomorrow.